Hey everyone, welcome back to Corporate Decoder, the place where we dig deep into the world of business filings. Today, we're cracking open Turtle Beach Corporation's proxy statement, and trust me, there's more than just seashells and sunshine in this report. Get ready for some potential boardroom drama, a compensation puzzle, and a look into what makes this gaming headset giant tick. First, let's start with a letter from the chairman, Terry Jimenez. It's a friendly invite to the annual meeting and a quick rundown of what stockholders will be voting on. Electing directors, ratifying their accounting firm, and weighing in on executive pay. Nothing too surprising here, but pay close attention to that executive compensation vote. It's often a hot topic. The annual meeting is virtual only, which is common nowadays. Stockholders get to listen, vote, and ask questions online. There are a few important dates to keep in mind. To be eligible to vote, you must have been a stockholder of record as of April 11, 25. In the Proxy 2020-2025. If you want to vote, do so before 11/20/25. And the proxy materials were first sent out around April 18, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2020, were first sent out around April 18, 2020, 2020, 2025. If you want to vote, do so before 11:29 p.m. Eastern Time on June 10, 2020-25. The meeting itself takes place on June 3rd, 25. Alright, let's dive into the important items up for vote. First, there's the election of 8 directors to the board. Next, we have the routine ratification of Ernst & Young LT as their accounting firm. Then comes the non-binding advisory vote on executive compensation, the say-on-pay. They also want a vote on how often that say-on-pay vote should happen. Finally, they're asking for an approval to increase the number of shares in their stock-based incentive plan. Now, how many votes are needed for each of these? For electing directors, it's a majority of votes cast. Same goes for ratifying the accounting firm and the executive compensation. The frequency of the say-on-pay vote is a bit different. Whichever option gets the most votes wins. For approving the stock plan amendment, again, it's a majority, broker non-votes, meaning when your broker doesn't vote on your behalf, don't really affect these outcomes. Except for the accounting firm ratification, where brokers can vote even without your instructions. Let's talk about the board itself. The board has determined that Terry Jimenez, Elizabeth Bush, Catherine Sherping, Julia Says, Andrew Wolf, and William Wyatt are all independent directors according to NASDAQ standards. This is important because independent directors are meant to represent the interests of the stockholders, not management. The board also takes its environmental, social, and governance responsibilities seriously. They are looking at lowering the environmental impact of their products, reducing energy consumption, and making sure their manufacturing partners are acting responsibly. They also adopted a global human rights policy. The board has a few key committees: an audit committee to oversee financial reporting, a compensation committee to decide on executive pay, a nominating and governance committee to handle board composition and ESG, and a value enhancement committee that evaluates opportunities to maximize value for stockholders. Now let's look at the directors up for election. The board nominee skills include executive leadership, financial and operations experience, product and intellectual property strategies, and so on. That's a wide range of skills. It's helpful when overseeing a company like Turtle Beach. It's not just about gaming anymore. The key executives are Chris Kian, the CEO, Mark Weinswig, the CFO, and Megan Wynn, the general counsel. Kim was previously interim CEO and senior VP of global sales before taking the top job. Weinswig is the new CFO. Let's talk about who owns Turtle Beach. Looking at the table, you can see the percentage of shares owned by the executive officers and directors are a little more than 3%. DCVGA LLC owns a big chunk, about 17.1%. Rabil Albert owns 6.7%, and then Garnet Equity Capital Holdings and BlackRock Inc. and Windward Management LP with around 6%. Let's take a quick peek at the audit committee report. The audit committee is responsible for appointing the independent registered public accounting firm. They oversee the integrity of the company's financial statements and internal controls. The committee recommended that the board include the audited financial statements for 2024 in the annual report on Form 10-K. Speaking of auditors, the company wants you to ratify the appointment of Ernst & Young LLE as their independent accounting firm for this fiscal year. The audit committee already picked them, but they want the stockholders to weigh in. The board is urging a yes vote. For a look behind the curtain, here are the fees billed by Ernst & Young. For 2024, audit fees were a little over $2.5 million, and tax fees added another $59,000. Compare that to 2023, where audit fees were around $1 million, so it has greatly increased. This could be due to an increased scope of work or perhaps some complex accounting issues that needed addressing. Now let's get into the juicy details of executive compensation. The named executive officers for 2024 were Chris Cairn, the CEO, and John Hanson, the CFO. In 2024, Turtle Beach had some pretty solid results. Net revenue jumped to $372.8 million from $258 to $1 million from $258 to $1 million the previous year. They swung to a net income of $16.2 million compared to a loss the year before. Adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization, also increased to $56.4 million. Looking at the 2024 target pay mix, a big chunk of the CEO's compensation is tied to performance. 70% of their long-term incentive is from PSU, performance stock units. Only 30% are the traditional RSU, restricted stock units. Now onto director compensation. The non-employee directors get a mix of cash retainer fees and stock awards. The chair of the board gets a bigger annual cash retainer, then there's extra pay for chairing or serving on committees. Looking at the numbers, Terry Jimenez, the chairman, made around $287,000. Catherine Sherping, who chairs the audit committee, made around $190. It is all pretty standard for a board of their size, and the non-employee directors must own shares and vested awards with a value equal to 3 times the value of the annual cash retainer, and all directors are restricted in pledging and hedging their shares. This encourages alignment with stockholders' interests. It's worth noting a couple of related party transactions. That is when a company does business with its insiders. There's the deal with Donerail Group LP regarding how they'll vote their shares, and the merger with Performance Design Products LLC, and the associated agreement with DCVGA LLC. Mr. Muscatel used to be at PDP. These sorts of connections aren't uncommon, but it's something to be aware of for now. What's my take on all of this? Turtle Beach seems to be heading in a good direction. The company achieved strong financial growth last year. In my eyes, there are some potential challenges ahead. As you can see from the report, they're betting big on performance-based compensation, and that relies on hitting those targets. It's crucial to stay on top of those metrics like revenue, market share, and the stock price goals to actually get paid. Also, the high amount of debt might be a problem in the future. Overall, Turtle Beach needs to navigate an increasingly competitive gaming accessories landscape. They need to keep innovating, managing costs effectively, and make the right strategic decisions. Thanks for watching. If you enjoyed this video, be sure to hit that like button, leave a comment, and subscribe for more corporate decoder breakdowns. See you in the next one.